So now we're going to look at a bank balance sheet. It's going to be really interesting because it's a very, very different kind of look. But the book value is what shareholders' equity is. In other words, it's kind of what is the company worth at bottom. And if you're a real deep value investor, you kind of look at book value as like, you know, this is the worst case scenario if the company were to shut down today. Now that's not always true, but you know, it's again, some of this gets very involved in detail. Let's make a model for JP Morgan, and I'll save this on my GitHub. And if you go to my GitHub, you can look at all my models. They're mostly in pharma and biotech and tech, but I'll do this one for JP Morgan just for the special occasion. So the first thing I look at is the stock price, and we have $133.65, and then I want to look at the shares outstanding. So I'm going to go to the SEC website, sec.gov, and I just type in JP Morgan stock ticker JPM. And I could also use a different information service provider like Bloomberg or my system, which is called 𝗕𝗙𝗚, and I can use these service providers to like quickly pull up company filings. So if you use one of these systems, you can rapidly like pull up a 10K or 10Q without having to go to a website. But these are sometimes expensive or difficult to use systems. So in any event, this is my system called 𝗕𝗙𝗚, which I'll be unveiling publicly soon. We have beta users at the moment, and it's a free system, so it's definitely something that I'm looking forward to showing all you guys. And you know, you can definitely use it at your convenience for free when it's out. So in any event, let's go to their SEC filings on the SEC's website, which is accessible for free to everyone. And what we're looking for is the Form 10K. There's a lot of these weird other forms, because this, I guess when you're a bank company, you have, and you're the biggest bank company, you have tons of different like bizarre SEC filings. So I'm just going to type in 10K and see what happens there, or click here. So here's their JP Morgan's 10K. This is like the most important document that you could read as a business person for any business, is the so-called 10K. And in fact, if you know what Warren Buffett does every day, it's mostly reading 10Ks. So I developed 𝗕𝗙𝗚 with some programmers, so I have a software company now. So anyway, JP Morgan's 10K is very important to read, because if you think about what the biggest businesses in the world are, JP Morgan's one of them. So if you want to be somebody who's interested in the stock market or cares, reading this once a year is not too much trouble to sort of undertake. Now, the most important thing about 10Ks to me is that right on their first page, you can see how many shares outstanding the company has. And that might be hard to see, but it says 2.9 billion number of shares of common stock outstanding as of January 31st, 2023, 2.943 billion. So 2,943,355,459. So I'm going to put that here in our shares outstanding. And so this is what each share is worth, right? So if you think about it, there's 2 billion shares of the company, or 2.9 billion, so pretty close to 3 billion shares. Each share is $133. So if you were to try to buy every share and you could buy them for that price, it would cost you almost $400 billion. So that is the worth of the company JP Morgan. That is what's called their market capitalization, or sometimes just market cap for short. So the market cap of JP Morgan is 400 billion, and it's the biggest bank in the world as far as I know. So I'm going to just mark down here, this is my kind of method. That's hopefully will become a standard on Wall Street. I know a lot of people watch these videos, so this is what I like to put down, the 6 basic elements of any company. So a $393 billion company, each share is $133. So if you bought 1 million shares of JP Morgan, right, it would cost you $133 million, right? That's a lot of money. And you still would not be a big shareholder of JP Morgan. You would not even own 1% of the company, right? 1% of JP Morgan would cost you $3 or $4 billion, just about $4 billion, which is more money than most people have, more money than Mark Cuban has, or Jason Calacanis, or anybody like that. I'm just joking around on those guys. But in all seriousness, it's a lot of money. And if you owned 1% of JP Morgan, guess how much power you would have over Jamie Dimon or someone like that, the CEO of JP Morgan? Absolutely zero. You would have no power over them. You could not tell them anything. They have every right to say, oh, you own 1% of our company? Kiss our butt. We don't care. If you own 5% of JP Morgan, you might have a say, but that would cost you $20 billion. The amount of people who have $20 billion is very limited. And even then, you might not have much of a say. So this is a really big company, and it's going to be very, very hard to push them around. They're also a very regulated company. The key regulator that you should know about is not the FDIC. It's actually called the OCC. And many people have never heard of the OCC. The OCC is the Office of the Controller of the Currency. And this is one of the most important government entities, and almost nobody knows what this is. This is the bank regulator. The FDIC is just the insurance company. This is the company that is supposed to regulate all the banks. So I haven't heard many people talking about the OCC. But let me see here. It says here, the OCC examines the condition of the banks it supervises and their compliance with laws and regulations. Let's see, who is the OCC chairperson? Michael J. Sue. Yes. In any event, let's keep going with this 10K. So one of the things about JP Morgan that a lot of people don't know is that JP Morgan was not always a really big bank. And one of the things that is interesting to understand is that JP Morgan became a very big bank in the last 20 years. There was a bank called Manufacturers Hanover, and the merger of Manufacturers Hanover, it's now defunct, but Chemical Bank and JP Morgan created this monstrosity. So banks were actually quite a bit more diversified over the years. But this successor to, or JP Morgan's kind of the successor of this bank, but Manufacturers Hanover Trust was sort of like the big mergers that occurred to create JP Morgan. If you really want to learn a lot about banking, I think 𝗤𝗠𝗏 tweeted out a chart of all the mergers that created JP Morgan. So JP Morgan also has roots with Morgan Stanley. They're very different companies, but they both started out a long time ago. So the history of banking is actually quite interesting, but let's get to the gist of this. And in fact, I can probably just skip to the financial statements by clicking right here. Jamie Dimon, the famous CEO of JP Morgan, is 66. I'm personally not a fan of JP Morgan, the company, but in terms of like customer service and stuff like that. But remember, it's an investment bank, and it does a lot more than just do commercial banking and retail banking. So let's see if we can find the financials. There might be like this separate, there's often this like separate section. A little frustrated because this is a very, very big document, and I just want to make sure that I get the right. Okay, here's usually where it is. Okay, cool, here it is. So the auditor is Pricewaterhouse, and here's their income statement. We looked at the pharma company's income statement a minute ago, but now we're going to look at JP Morgan's balance sheet first. But you can see they have an income statement too. There's revenue, right? There's costs, and there's income. And a lot of the revenue you can see is coming from interest, right? The interest on the loans that they make. They make loans with your money. They don't give you their profits, right? Look at how much money they made, $35 billion. You don't get those profits. They get those profits. Their shareholders get those profits. They get bonuses from those profits. You get nothing. You get the lowest possible interest rate that they can possibly provide to get you to give them their money, to give them your money, which they will hold and risk and lend and do whatever they want with, and give you it back if they can hold on to it, which Silicon Valley could not hold on to it. So let's look at the balance sheet in terms of cash and due from banks. Again, there's so many squirrely things in these bank balance sheets that make you go, Cash is something that I think anybody can understand what cash is. But when it comes to a bank, it's not that simple. It says due from banks. What does that mean, due from banks? So this is money that JP Morgan has, but it's also money that other banks owe them, I guess. And this is $27 billion. And what's interesting is that that's not a lot of money for JP Morgan. You can see that just the next item is $500 billion, and that's deposits with banks. But wait a second. Aren't they a bank? Why are they deposits with banks? It's kind of a funny statement. So we're going to have to look at that too and say, well, where are those deposits actually deposited? Or I'd assume they're with JP Morgan itself, but it's just sort of a funny name, isn't it? So we just looked at the first two parts of the balance sheet. And I've been looking at financial statements for 20 years. I'm something of an authority on the matter, and bank balance sheets are not simple. So here's the next one. Federal funds sold and securities purchased under resale agreements. Help me understand what that is. Does that sound like English to you? $315 billion. So $315 billion of federal funds sold and securities purchased under resale agreements. Not as easy as pharma or tech. You know, if you look at Cisco's balance sheet or Microsoft's balance sheet, the most complicated thing you're going to see is deferred revenue. This is not so simple. All right, securities borrowed. That is $185 billion. Trading assets. And the other thing here about securities borrowed is look at the fair value versus the actual book value, right? And this is something that 𝗕𝗏𝗏𝗧𝗏 was talking about the other day, that those are two very different things, but let's keep going. Trading assets, $453 billion. Available for sale securities, $205 billion. So this is sort of the most understandable thing. These are basically just securities, right? These are just financial instruments that JP Morgan owns. So I think I can understand that. And this is held to maturity securities. So these are basically bonds, right? Held to maturity securities. So I'm actually going to combine these two, available for sale and held to maturity. And you can basically see that they have 600 billion-ish of securities that they could sell that seem like cash. So between this, and this, they kind of that kind of looks and feels very cash-like. These three, I don't know. They could be cash-like, but I have no clue. But this is $1 trillion of cash that seems to, or cash-like things that seem to belong to them. All right, so now they have loans, and these loans are the biggest part of their balance sheet. They have $1 trillion of loans. But if you look at the investment securities, net of allowances for credit losses, they have this number 600 billion. So I think that's a separate line. Pretty sure it is. Okay. I want to make sure I did all this right, because it looks like there was 425, 205, and then 631, 162. Okay, so we're actually they added them as well. So I added them, they added them. That's a good sign. So now there's the bulk of the bank, which is loans, right? Loans, and we have loan losses. So I'm just going to do net loans. So this is also quite understandable to me. That's an asset. And so in terms of the assets I understand, and I'm being humble here, that I think these are things you and I can both understand, that we're looking at $2 trillion that we understand. This is their cash as well. These are stocks and bonds that they own, mostly bonds, and these are loans that they've made. So almost 2.3 trillion we understand, and maybe 1 trillion is not quite obvious until we do a little more thinking and research. And again, I'm not a bank analyst, so this isn't my forte, but I do know financial statements. So the rest is pretty small, actually. So we have accrued interest. We actually do have property, plant, and equipment, and we actually do have goodwill. And then we have other. So the total assets of JP Morgan is going to be the combination of all this. The accrued interest is pretty small on at least a relative basis. It's 125 billion. The premises and equipment is also small. These are all basically the buildings and servers of JP Morgan, and that's 27 or 28 billion. The goodwill is not insubstantial at 61 billion, and then they have other assets. And the scary thing about other assets, right, is it's 182 billion, and you have no idea what it is. Hopefully they explain it somewhere in this massive document. And it could be one footnote in this whole document that blows everything up. And that's why you guys always ask me, like, Martin, man, you're always looking at these financial statements and it looks so tedious and you do it manually. Can't you write a computer program to do it? I write computer programs all day. You can go to my GitHub. I have a software company. Here's a little sample of a computer program I've been working on over the last few days. I am a computer programming, maybe not as good as some of my colleagues, but I'm a bit of an expert in that field. And trust me, when you do these financial statements, you want to do them very slowly and very, very carefully. You don't just want to, copy and paste and not double check the numbers yourself, because this is how things like SVB happen. It's people who do that and put their feet up and say, the computer did it. You have to be really engaged. If you are willing to take shortcuts, then that's on you, but I'm not willing to do that. So anyway, those are the assets of JP Morgan, $3.6 billion. And like I said, every page, every letter of this entire document is relevant until proven otherwise. All right, deposits are a liability. That's something a lot of people don't understand. When you look at a bank, the deposit is a liability from the bank's perspective. Why? Because it's not their money, it's your money. And that's the problem, again, with the banking system, is they take your money, they make risky loans with it. When they make profit, they keep it. You don't get anything. They're going to give you a small percentage to keep that money. Should that change, I think we're going to start to see people think about that changing. I think we're going to start to see people talking about some other way of doing banking where it's more equitable. There are credit unions. There are other ways to do banking. You don't have to basically say, here, bank, go play with my money. Go gamble with my money. And if I need it back, maybe it'll be there, maybe it won't. I think that you're going to see more and more people say, wait a second, I see all these big buildings in Manhattan. Half of them have JP Morgan as their biggest tenant. Why should I be paying all these brokers, traders, and executives bonuses with my deposit? And the truth is JP Morgan doesn't care about you. You know, they could care less. They're going to pay you the smallest amount that they can pay, which right now I believe JP Morgan pays pretty much close to 0%. They pay almost 0% on checking accounts, and they lend out the money for quite a lot more, right? Their credit card loans, their mortgage loans, those are all very good interest payments. So if they get their money back, they keep all those profits. They don't share it with you. They don't say, well, listen, if I came to you tomorrow and I said, hey, I need to borrow $100,000, and you said, well, what are you going to do with it? Well, I have this great loan I'm going to make. I'm going to make this guy a loan, and he's going to pay me 8% a year. And you say, okay, that sounds good, Martin. Are you going to share the 8% with me? Do you want to go 4% for you, 4% for me? And I told you, no, I want to go 99% me and maybe 1% you. And you said, what? That doesn't make any sense. And then you said, well, not only that, but Martin, I'm thinking about this. Maybe I'll do this because I trust you so much. But what happens if that guy doesn't pay the loan? What happens to me? And what happens to you? Well, just nothing happens to me. So you want me to take all of the risk but have zero of the benefit? Why would you do that? And I think that banks are probably going to take a backseat to other shadow banks like hedge funds and other things. So I think that the banking system could change at some point, but I think that banks have become this like necessary evil, and because they're necessary, we can't help but bank somewhere. And there's this oligopoly of banks that sort of the government has created, whether it's JP Morgan or Bank of America or Wells Fargo. There's a handful of big banks that you kind of have to go to, especially if you're a big company. The average person can't change a bank. But if Apple moved their money from JP Morgan to Silicon Valley would be solvent. But Apple can't do that. It's too risky. So it's a really messed up system. It'd be nice if there was another solution. I know people have talked about crypto. Crypto is not really robust enough to account for the entire financial system. Bitcoin barely works, to be frank. There could be another system that develops over time. I sure hope so. But I would love to see there be some solution that works. Now, the other thing to keep in mind is that JP Morgan, at the same token, does help the world go round. If you're a big bank like JP Morgan, you are lending money to big corporations like Apple and Pfizer and Merck. And those companies are doing good things. So you need a bank like that who can help you do a $20 billion financing. Silicon Valley Bank isn't worth $20 billion themselves, let alone could they lend you $20 billion. So it's pretty tricky to sort of live or see a world without banks because big corporate activities would cease to exist. There has to be some counterparty that can make a huge loan. Now, at the same token, some of the big non-bank financial institutions like like Berkshire Hathaway can make you a private loan. I've actually gone to hedge funds for private loans sometimes. They're much more expensive, but you can go to BlackRock for a private loan. And these are sometimes called shadow banks for this reason. They're not banks, but hey, they can make you a loan. Anybody can make you a loan. It's just a matter of who's doing it and where is their money coming from. So I do think that we're going to see an increase, quite frankly, of shadow banking due to some of the changes that are happening. So anyway, JP Morgan has $2.3 trillion in deposits and 3.7 in assets. So they're covered now, but they have other liabilities. Let's look at their other liabilities. They have this federal funds purchased liability. What's nice about this is that if you look at the difference between the federal funds sold and the federal funds purchased, they kind of net out a little bit. So we still want to understand what that is. And forgive me for not knowing exactly how every piece of the Federal Reserve banking system works in America. It's fairly complicated. I know a little bit about it, but we want to look at some detailed footnotes. There's nothing wrong with saying you're not 100% sure of something and going and checking it out. So here they have some debt, and this is just debt that this is their paper basically, right? These are the bonds that they've sold to Wall Street to finance their business. And it almost makes you wonder why a bank needs to have debt. Isn't that funny? You know, that a bank like JP Morgan actually has debt. I can understand an industrial company having debt, right? If I'm Pfizer and I want to buy a biotech company that's really promising, I might say, well, I could pay with it with cash on my balance sheet, or I can borrow money from JP Morgan. That kind of makes sense. But it's kind of weird to me that then JP Morgan would go borrow money as well. And it's not a small amount, right? It's $350 billion. And presumably it's a safe bet, but what do we know, right? Everything's safe until proven otherwise. But it does make you wonder. So here's trading liabilities. And again, I think these are like, as I think more about what could trading liabilities be, they have trading assets and trading liabilities. I think these are probably like assets with trading partners, things like that. So it's about 200 billion. Accounts payable, so this is money they owe, and other liabilities. It's a very large number for a vague, a pretty vague statement. So these bank balance sheets are something else, I gotta tell you. And maybe we'll look at like a small regional bank as well, like First Republic. All right, so we have VIEs, which are sort of weird sort of financial instruments. And that's it. We have total liabilities of 3.3 billion. So the book value of JP Morgan is 292 billion. And if we reduce that by goodwill, the tangible book value, right? The tangible book value is 231 billion. But the market value of JP Morgan is 393 billion. So it makes you wonder why JP Morgan's trading at 2 times book value. Most people say that banks should trade at 1 times book value, or slight premium to that, but not more. So JP Morgan looks pretty overvalued, just based on that alone. But we still also have to like dissect this really carefully. That's like a rule of thumb for most banks, is that they should not be trading at this massive premium to their book value, because ultimately, you know, a bank is nothing more than its assets. And as its assets get worked out, that's really all you get in a bank. It's not like you're buying a franchise, right? You're just buying the current loan book. So that doesn't apply in a tech company, where the book value doesn't really tell you anything other than maybe the rock bottom value of what a company should be. Whereas book value for a bank actually does kind of reflect, you know, what it should be. So do we want to look at First Republic really quickly? And then maybe sort of see if like a smaller bank like that is you know, a little easier to understand. I think my cat is hiding somewhere. So let's make a quick model in First Republic. And First Republic stock is at $81. And so this is supposedly the next bank that's in trouble. Maybe we can figure out if they're actually in trouble. Okay, so here's the First Republic 10K. And as usual, we have shares outstanding right here, 186. So this is a lot smaller of a bank, right? 15 billion market cap. So you could be the largest stockholder of this bank with a mere $1 billion, or one of the largest stockholders. It's funny that actually in banks, if you try to become the largest stockholder of a bank, you actually have to get regulated as well. So they don't let just anybody be the largest stockholder of a bank. Isn't that funny? It's regulated by the OCC that I mentioned earlier. So for example, if I wanted to go buy all the stock of First Republic, they probably wouldn't let me. Or they probably wouldn't let a foreign company do that either. at least without like explicit permission. And maybe that's a good thing, I don't know. So here's their SEC filing. It's a lot smaller. You can see it's only, help me out, Adobe, 300 pages. And a bunch of that, as usual, a bunch of the stuff is boilerplate to begin with. So let's see if we can't find the income statement. And you can see that these, or balance sheet I should say. So you can see a lot of these are very esoteric financial statements, unlike an industrial company like a pharmaceutical company or a tech company or software company or something like that. Those are really easy to understand. Bank balance sheets are really hard to understand. We picked the biggest bank in the world, which is probably going to be the most complicated. So here's First Republic, which is a bit easier to understand. Let's look at that. All right, so this is hopefully going to be a lot simpler. They have cash, which I think we can get our head around, is $4 billion. They have debt securities that are available for sale. So these are bonds of $3 billion. They have debt securities held to maturity of $28 billion. Okay, we'll think about that in a minute. They have a tiny, tiny bit of stocks, and then they have a lot of loans. So this is like a very pristine balance sheet. There's no federal funds sold or anything like that. This is like really, really easy to understand. Debt available for sale, I'll just write that, and then held to maturity, and then equities, loans, life insurance, it's pretty small for them, just $3 billion, tax credits, PP&E, almost no goodwill, and then other assets of $5 billion. So this is a $200 billion balance sheet. So this is almost like the same size, basically, as a Silicon Valley Bank. Sort of the top 20 bank, but not a JP Morgan. So this is a lot easier to understand. $212 billion, right? Life insurance, tax credits, PP&E, goodwill, and other. So this just took 1 second. So now we have liabilities. These are deposits. So they've got non-interest bearing deposits. I mean, to me, I think that's like ludicrous, right? That you could deposit your money at a bank and it doesn't earn interest. Non-interest bearing. Like why? Then you have interest bearing checking. Then you have money market checking. I'm just going to add money market checking and savings to save time. I'm assuming those are pretty similar. And then CODs. And these are all their deposits. So they have 176 billion of deposits. And they have, those are the liabilities, right? And like I said, in a bank, the deposits are actually liabilities because they do have to return that money. It's not their money. They have to return it if it's asked for. So what's an FHLB advance? That's the Federal Home Lending Bank, I want to say. Federal Home Loan Bank, close enough. Interesting. Okay, so that's a debt. That's a debt as well, basically. So unlike JP Morgan, they actually don't have too much debt, right? Although that's a lot from that federal. All right, so they have 15 billion in debt. So that's also a liability, obviously, right? And then they have this other liability, which is 3 billion. So total liabilities, drum roll please, is, wait, I didn't add that up right. Hold on, as I sum these. Okay, total liabilities is 195 billion. So the book value is 17 billion. So here's where the rubber hits the road. This is really interesting. I want you to pay attention to this. The book value is 17 billion, and it makes sense, right? These assets are worth 212, and these liabilities are worth 195. These liabilities won't really change, right? People have put 176 billion in this bank. So if they want the money back, they're not going to wake up one day and ask for, oh, well, I want 170 back. Or they might wake up one day and say, I want 200 back. No, they put 176 in, they have the right to get 176 out. But on the asset side, this 212 billion, this might change. Why? Well, these are all bonds. The cash won't change. What about these loans? Well, if they don't collect those loans may not be worth 166 billion. They might be worth 150 billion if they're bad loans, right? The most they could be worth is roughly that much. But what about this? They have 28 billion of government bonds. But what are those bonds worth? What if they're worth less than what they're saying they're worth. What if those bonds have dropped really fast, which they have? What then? Well, the company only has 17 billion of cushion. So maybe that 17 billion is worth less if I mark this down. So what if I wrote another column here called reality? And I said, well, in reality, the cash is worth the same, but maybe this debt is worth the same. But what if these bonds were down 20%? Okay. And these stocks are worth the same. These loans are worth the same. This stuff's the same. This stuff's the same. This is not worth anything to, in terms of liquidity. Neither is this. This I don't even know what it is, but I'll count it because I'm a nice guy. So now we're talking about real assets, and I'm being somewhat favorable here, of 206 billion. Well, these we all know, as I said, are going to be the same. The liabilities are still 195. So the actual book value of this bank could be as little as 11 billion. Well, what would happen if we had this, reality and fear, and that people said, you know what, I don't want my money in this company, First Republic. I'm going to take some money out. And what would end up happening is, well, I don't know if they can use other in a pinch. I don't know what is in other. So maybe they can use half of that to meet liquidity in a pinch, right? They can use all that cash. They can use all these available for sale. They probably can't use this held to maturity unless they sell it for an even more discount. Let's say they can use all these stocks. They can't really use the loans, right? Because the loans are, not exactly liquid. Let's say they're somewhat liquid. And I'm being very generous. If they had to sell all their loans tomorrow, they couldn't do it. Same thing here. They can't use their life insurance. And I doubt they could use their tax credit. So their actual ability to meet these loans is somewhat limited. And they still have all those liabilities. So I don't know, if half of these deposits wanted to move, they would not be able to do it, right? If $80 billion left this company, in fact, even if 10% of First Republic's deposits left, they don't have the cash to make them whole. They only have $4 billion in cash. How are they going to be able to withstand Monday? Oh man. I think I just I want to make sure you guys get the link for my new web app called 𝗙𝗏𝗏. This is a financial information app that I created to compete with Bloomberg and other financial apps, so you can apply for a beta, access to a beta. It's still in a fairly early stage of beta, but you're welcome to join the community. Any questions you want to ask me, you can go on there, and I'm happy to chat with you about any stock on 𝗙𝗏𝗏. I'm also coming out with another app in the next few days, hopefully, that'll be, I think, really groundbreaking. There's also my scientific application called 𝗥𝗙𝗥𝗧𝗏, and you're welcome to try that out. It's a really neat, really neat tool where you can basically perform molecular interaction calculations on the web. It's actually free up to a certain amount of computation, so we provide the first ever access to a software package like this for free, which is really kind of, to me, incredible. I wish this kind of thing was available when I was a kid. I would love to try it out. So this is, a fairly small molecular screen we can do for 10,000 compounds or so. And actually, like I said, there's really nothing like this available on the web for free. And basically this is a molecule, a protein in the body, and this is a molecule that could be a drug one day, or a perfume, or a animal pharmaceutical, or any other molecule you want to interact. Pharmaceuticals are one option. And you can actually click and see how much energy it would take to bind these two drugs or these two molecules together on a theoretical pocket versus the real one. And you can try to improve the relative energy needed to make that bond. And that's really what the biochemical world is all about. So you can see this rapidly calculating thousands of combinations. The first 10,000 combinations are free. After that, there's a nominal fee. But like I said, there's no software like this on the web, period, free or not. So, it's a really expensive software from other companies that's like 50 grand or more. that I've used over the years in my career. So being able to put this out was a lot of fun. Again, it's called Drug-like. And then if you want to sign up for Godel, my financial terminal, that hopefully will be far more advanced and also have a free tier that professionals can actually kind of use to look at the stock market and other markets in a really sophisticated way. I think that's something that is also something the world needs. So the tools out there for finance are pretty shitty, and I think by providing like a really sophisticated set of tools that could basically compete with Bloomberg and the other sort of terminals that aren't online. This is just a website you go to. Like I said, you can get access if you sign up for that Google Forms. And there's a lot you could do with it that's very, very similar to a Bloomberg, and at a fraction of the price, and definitely a free tier for anybody that just wants to look up some stock prices or something like that. It's free. But if you want to do more advanced things, you have to pay a small amount, but it's still a lot cheaper. So you can sign up for Godel on the form that I sent out, or you can just wait and it'll be available for the public fairly soon. We do intend to provide an API, but we're more of an API consumer than provider at some point, at this point. But there'll be a lot of really cool tools that straight from my mind into this world. So a lot different from kind of the current systems at Bloomberg and so forth that aren't very good in my opinion, and way too expensive to use. So anyway, hopefully you'll see some of that innovation really soon. Again, there's nothing quite like this on the web, whether it's TradingView or any other app. This is really, I think, state of the art. So anyway, thanks for watching, guys. Catch you next time. See you on Monday. Should be really interesting.